Right, hi everyone, this is Hanson Welu with the Welcome Home team at Keller Williams Realty Elite. And today I'm here with Belinda Price. She's the area manager for New American Funding and a senior loan officer. And we're going to talk about if you're considering buying or selling in the next 6 months, maybe steps that you should be taking, or answer some of the questions that our team has been answering. So with that, I'm going to hand it over to Belinda and just talk a little bit about what you do.
All right. Thank you, Cindy, so much for having me on. It's just really kind of fun in this environment that we're in, right? Everybody's doing something new with video and reaching out and answering questions and things like that that our home buyers and home sellers might have. I am the area manager, as you said, for New American Funding, and I just help homeowners and home buyers through the process of obtaining financing and just really get them on a successful home ownership journey.
Wow. Well, how about if I just ask you a couple basic questions first?
Okay.
A lot of first-time home buyers especially don't know the difference between conventional FHA and DVA. Could you explain that?
Sure, absolutely. Well, most people think about putting like 20% down, and that's really the conventional myth that we want to bust, right? So conventional financing, typically you're going to get a prime interest rate if you do have 20% down, but that doesn't stop you from purchasing a home with less than 20% down. So there is a 3% down option for both Fannie Mae and Freddie Mac, which are the agencies behind conventional mortgage loan products. Okay. Mm-hmm. So with those, there's a 3% down option, and then all the way down to 10%, 5%, 10%, 15, 20, however you want to go.
Okay. If
you do put less than 20% down, you will typically have to pay private mortgage insurance. And that means that that's mortgage insurance that you pay either monthly, or you can pay one lump sum, or you can split the mortgage insurance with the lender. So there's a bunch of different options that you can, that are provided to you when you put less than 20% down on a conventional home loan.
Okay. Well, how do people know which one is best for them or what they should be looking at?
Yes. And that is also a really good question, because typically you want to start, at the beginning. If you're even thinking about purchasing a home loan, you want to have a mortgage professional inquire onto the 3 credit repositories. There's 3 credit bureaus, and what we'd do is run a credit report. That's first step 1, right? Whether you're thinking about buying in 2 weeks or 6 months. You have to start at the beginning, because the credit profile is really what is going to assist your mortgage professional into finding the right product for you in your specific situation. It's not one size fits all.
Right. Now, hopefully this isn't a silly question, but you say the credit, right? Pulling your credit report. There's a lot of people that'll just do that online, like Credit Karma or whatever. What is the difference between looking at your credit there and through you?
Through a lender. Yeah. There's a lot of differences, but Credit Karma is a good way to just kind of track your credit and make sure that there's not mortgage fraud, but like any type of fraudulent activity or something like that. I'm sure you can get notified by your bank if you're set up with something with that. But mortgage lenders typically use a different formula, basically, when they're inquiring to the 3 bureaus. And then we're going to use your FICO score, which can be either higher or lower than what you're getting from Credit Karma. But we can't use a credit report from Credit Karma. We have to use, through the bureaus that we're going through.
Okay. And FICO score, so for a conventional loan, what does your score have to be?
Well, and that's a moving target. So especially now with COVID and all kinds of different lending environment, things have changed a little bit, because it's up to the end investor as to what minimum credit score that they're looking for. But if you have anywhere it varies. It's going to vary from like a 620 all the way up. But if you have a 620 FICO score, the best product may not be conventional. Your best product might be an FHA loan or a VA loan. But if you are, if you take that first step, get the credit pulled, really look at the big picture, because different creditors that are reporting to the bureaus report differently to the three bureaus. So at the end of the day, you just really need somebody a mortgage professional to look at it with you, go through each line item, and then prepare you. So if you are looking to get into a conventional loan versus an FHA loan, if you start by pulling your credit and say you have a 620 FICO and you need to get to a 660 FICO to qualify, right? Then there's certain steps that you can take to get there with either credit repair or just really monitoring the credit and seeing what you can do differently in your monthly bills to get your credit scores increased.
Oh, great. So now you mentioned FHA and VA, and a lot of people don't even know what those are. So if you could explain what that is, that'd be great.
Yeah, well, FHA, long time ago, they created FHA. I mean, actually, I think it was the year I was born, but anyway.
Way long ago.
Way long time ago. So FHA is really meant to kind of level the playing field, right? So there's a lot of misnomers about FHA being maybe a product that is not as good as like a conventional loan, or maybe more strict where appraisals and things like that are concerned. So I see a lot of like real estate professionals saying, oh, maybe we don't want to do an FHA loan because the appraiser is going to be very critical about the property. And that is not necessarily true. So all agencies have investors behind them. So they want to make sure that the collateral that they're lending on is in good repair, right? So whether it's conventional or FHA or VA, the house should be in good repair for the new home buyer to come in. So that being said, so FHA is really a good product for those home buyers that maybe have less than 5% to put down. They're also, the guidelines are a little bit more liberal for people that maybe have had a credit event in their past, like a bankruptcy or a foreclosure or a short sale. The FHA is a really good product to help those people get back into home ownership or get into home ownership after a large credit, what do I want to say, like an event, right?
Okay, so would anyone be able to get an FHA loan?
Just anyone.
What are the limits on it?
Well, FHA does have a 3.5% down minimum down payment. Okay, of the buyer's own funds, or it can be gifted from a family member or their employer, or it can come from like a first-time home buyer program or something like that. Okay, so but really you should consider having 3.5% of your funds down payment in savings.
Okay, and is there a purchase price limit? There is, right, on FHA?
There is. The purchase price limits are by county, so it would be a big long list, but you can definitely look those up. And again, your local mortgage professional will be able to help you navigate through that of whether or not you're pre-qualified and what the limit is for that purchase on the FHA.
Well, and not as many people qualify for the VA loan because that is for veterans, right?
Right.
But can you just explain a little bit about that if someone does have veteran status?
Yes. So if you are a veteran and you have you'll know what I'm talking about when I say DD 214. So you have a DD 214, you can actually go online. I believe it's va.gov, and you can see if you qualify for VA home financing. If you qualify for that, it's a really, really good product because it does not carry any mortgage insurance on a monthly basis. You have an upfront funding fee, but you can do 100% financing. So you, as a veteran, if you qualify for VA home loans, you can actually get into a house with $0 down. So you would obtain your certificate of eligibility. The interest rates are very good, very similar to other government loans like FHA. Right now, they're sitting in a really good spot. And I think a lot of veterans don't understand that they think that maybe they can only use it one time. Maybe there's, you can use it consecutively. You can pay off your existing VA and get another one. So by selling your house, there's lots of different opportunities with VA loans as far as getting qualified. So, because we also use different types of income calculations on VA loans.
Okay. Well, and now you did mention first-time home buyers a little bit ago. Is there down payment assistance? It varies, right? Is that also a county, city thing? But if they're interested in one of those programs, is there somewhere they can go and look and see what's available, or is that through a lender?
Yes. Well, again, I mean, most first-time home buyer products are community orientated, right? So there'll be certain communities that have bonds or grants available. And then also we have Minnesota Housing Financial Agency. You can go on to its MHFA is where you would want to go and look. But your mortgage professional that you are referred to by your real estate professional, or whether you have a family friend or somebody in the business, that would be a huge resource, because there's steps that you need to take with obtaining down payment assistance. There's some classes that you need to take online. There's a little bit more criteria to have to go through to get qualified for home buying assistance, whether it be closing cost assistance or down payment assistance. Typically you're going to need another year's tax returns. There's caps on the amount of income coming into the household to qualify. And there's also, there's some funding caps that you need to, you can't have too much money in your savings account, that type of thing. So there's some qualifications that you have to get through, and your mortgage professional will help you navigate through that.
Okay. Well, and we have people ask too, are there programs through cities for assistance in that for people that are not first-time home buyers?
Yes, absolutely. So there is, you don't have to be, that's another misnomer. So usually most people will say, oh, we're having first-time home buyer class, or there's first-time down payment assistance for first-time home buyers. And that's not necessarily true. So to categorize as a first-time home buyer, some products might be just focused on first-time home buyers. And if you have not had ownership in a property, whether you're on title or you've had ownership in a property in the past 3 years, that's the seasoning requirement for a first-time home buyer, or if you've never owned a home, okay? If you have owned a property in the past 3 years and you might need assistance to purchase your next home, okay, you would have to sell the house that you're in right now, obviously, to qualify. It can be simultaneous, same day. You could sell and buy on the same day, but that qualification would have to be there. And it's a different type of program, but it is available.
It is available. See, that's good to know. So with COVID going on,
yes,
people are wondering, how is that affecting things? Is it slowing things down? How about with appraisals for people thinking about selling or even buying too?
Yeah, I mean, that's another good question, Cindy. I mean, we're all in an environment that we haven't ever been in before, whether it be in real estate, in finance, even working at the grocery store, right? We're all in a different
We're
environment.
both at our kitchen tables, right?
Exactly. We're both at our kitchen tables. Who would have thought?
Mhm.
So in this environment, there's a lot of people that maybe have been directly affected by COVID. As far as maybe they are a server at our local restaurant here, and their hours have been cut, or they're doing curbside or something like that. If they're in the middle of a transaction, reach out to your loan officer and your real estate agent as soon as possible. There have been a few. I have a few going right now that it was right in the middle of the transaction. They got, they had to go on unemployment, and that's created a little bit of a hiccup in the process, but we have a solution. So as of right now, the guideline is that if you've had to make a change in your employment due to COVID, you need to be back at work full time for 2 weeks. We need a 2-week pay stub in order to get you back on track for qualifying. Okay. And obviously your employer needs to be open. So there's some criteria around that. But if you have been affected, don't be shy to reach out to your loan officer. I mean, it's most people are very understanding, even on the seller side. If something like that happens, we can hold the deal together and you can still get into your new home. It's just going to be a little bit longer than anticipated. If you are currently on unemployment or something like that, I've had this question asked already, well, can't we use that to qualify for a home mortgage? We can't. Unfortunately, unemployment is not what we call qualifying income. It's not going to last for 3 years, God willing, right? So we can't use that for qualifying income, and that's really unfortunate because we have a little bit of a hiccup if you're, receive tip income, or if you are, a hairstylist or something like that, So we're going to have a little bit of a hiccup, but we're going to be able to average out your income for qualifying. And again, you just need to reach out. And the sooner the better. If you're thinking about buying in the next 6 months, there's no time too soon to reach out. It's no obligation. Your loan officer is not going to charge you, application fees, that type of thing. It's no obligation. Just like it's good to have a plan in place, just like anything else.
So what other things other than that have changed, like with the process of getting a loan or getting to the closing table?
Yeah, there's a couple of items. If you're in the middle of the process, or if you've ever been through the process before, there's a few things. The IRS right now is not open. So your loan officer and our operations staff are going to be reaching out to you, the client, to go online and request your tax transcripts, because we're going to need those. So there's a few extra steps that we're going to need to take in where we would have requested that item. We need to reach out to you, the person that's buying the house or getting financing. The other thing is appraisals. So a lot of our appraisals are coming back where we only need an exterior only, which is a good thing. They've made some changes with FHA conventional, not so much VA, but FHA and conventional, where we're doing a exterior only inspection. So it's the same price as an interior exterior inspection. So you're going to have to pay the same amount of money, but you, as the home buyer, you won't see like inside pictures of the house, things like that.
Okay, what about if you're the home seller? Is there any reason to be concerned? And as a realtor myself too, is there? Because they're not going to know what's all in the house other than if we're providing that information, right?
Exactly. So if you're a home seller and or even a real estate professional, you might be a little bit concerned if, wow, they've done a whole bunch of upgrades, right, to the inside of the house, and we're only going to have an exterior only appraisal. It's best to make that information available to the appraiser. So the homeowner can make that available to the appraiser. And also real estate professionals can provide the comparables that they used for listing. So that way they might have some interior pictures from the pre-COVID, right? They might have had something that they would be able to provide to the appraiser to make sure that we get the value.
All right. And then homeowners too right now, because I know for quite a while, even if it's still going, a lot of people are refinancing. Is that still happening? And is it a good option for people now?
It is. I think that the refinancing is a very, very good option if you're not considering selling in the next, I would say, year to 2 years. Okay. There is a cost to refinance in most cases. So what you want to do is make sure that you're going to recoup that cost. So if your, interest rates are good, interest rates are strong, everything is relative, right? So depending on what situation you're in right now. But if you're planning on staying in your home, inquire with your mortgage professional, and they should be able to give you kind of like an outlook, right? Or a pro forma of what your mortgage is going to do, because it's just a debt that you need to manage. I've also had a lot of clients reach out about refinancing to get a little bit of extra cash out. So the same qualification is that if you were going to buy a house. So if you're on unemployment, I can't use that for income. Okay. We need to have a steady income. You have to qualify for a refinance, just like a new purchase. But if you do qualify and you check all those boxes, it could be a very good time to liquidate some of the equity that you have in your home just for some rainy day money, or maybe you want to get into the bottom of a financial investments, something like that.
Right. Well, awesome. When you mentioned a little bit interest rates, so people are always asking, what's the interest rate? Where are interest rates at today? I know that changes, and it also depends on each person, right? What they would get. Yeah. Where is the best place for someone to look and see what the going rates are?
That's really hard. That's a hard question. Just because, well, the thing is most of the questions that I get is like, I saw this rate online, and when most mortgage companies, most lenders are not going to advertise their worst rate, right? They're going to advertise the very, very best rate that you could obtain underneath these circumstances. So in fine print, you'll see this is with a 780 FICO score. This is with 30% equity, things like that. So the best way to find out for your specific situation is pick up the phone or, send an email out. Most, if you don't know a real estate professional, call your real estate agent first. They'll usually give you a name of a good reputable lender, and vice versa. So you can look, and on any given day interest rates can be different per lender. So Wells Fargo might have 3% today, New American Funding might have 2.875. It really just depends, but it's all about building that relationship and where you're comfortable as a consumer working with your financial, working with your loan officer.
Okay, and so kind of a follow-up to that, I don't know if it's similar to real estate, I'm assuming it is, but it's a lot of people like, what is the difference between a lending broker and a bank and a credit union, and where's the best place for me? Again, how do you answer that?
Yeah, I mean, again, it's just kind of, it's personal preference, number one, or number two, it could be your qualification. So between like credit union, bank, broker, direct lender, all the above, they all have different products. They all have a place in the mortgage financing world, but one might have, really, what should I say, like accommodate a buyer that has a 800 credit score and 30% down, and they might have a lot of assets in the institution, and they might be able to get a really good rate through there, right? Somebody else might have need that little extra navigation through the process, whether it be credit repair or need to find a creative way to obtain financing for that individual's specific situation. They might need to go to somebody that's a little bit more, maybe not a big box bank, right? But somebody that has already walked other people through that situation. So it's really about you and your specific financing situation, because no one home buyer or homeowner is the same. Everybody always has a different, whether it be financial situation or personal situation, it's all different.
Okay. Well, so what haven't I asked you today that I should be asking you?
We've covered a lot today. I think that our industry right now is really strong. There's a lot of questions, a lot of things around COVID. And I would say, if we haven't answered your question today, just grab the phone, give us a call. We're here. I know Cindy's always available. I'm available to answer any questions, and it's no obligation. Let's start. If you're thinking about buying in the fall or, even by July, it's happening. So we're, April was one of our record-setting months with New American Funding. So there are people buying homes and still refinancing if that's what they need to do in our environment. And we're all here for you.
Well, awesome. Well, thank you so much for answering these questions today.
Thanks for having me. It's awesome. It's good to see you.
Oh, yes, it's good to see you too.